If you want to know how tax brackets actually work and why your paycheck shrinks, the first thing you need to realize is that IRS didn't take as much as you think. Believing they did is costing you thousands of dollars. If you think your entire salary gets hit with one massive tax rate, nope, that is not how it works. If you asked 10 people to explain tax brackets, just maybe one would get it right. The other 9 would think a raise will actually make them broker. They turn down overtime, they'd avoid promotions, all because of a math myth. But today, we're fixing that. No jargon, no boring finance talk, just some real math and why you should never be afraid of a raise again. Here's how most people think taxes work. They look up a table, they see that they make $64,000 and they go, oh, I'm in the 22% tax bracket. The IRS is taking 22% of everything. If that were true, you would owe over $14,000, but that's not what happens. Think of your income like filling up a stack of buckets. Bucket number 1, the first $16,100 you earn, that's your standard deduction. Your tax rate, 0%. You keep every single penny. Bucket number 2, the next $12,400, that gets taxed at just 10%. Only money in that bucket gets hit. Bucket number 3, up to $50,400. That slice gets taxed at 12%, and only the leftover money spills into bucket number 4, which is at 22%. So on a $64,000 salary, you don't pay $14,000. You pay around $5,500. The bucket system just saved you $8,000. Your 22% tax bracket is just your marginal rate. It's the tax on your next dollar, not all your dollars. Your actual overall rate, it's only about 8.6%. So if the math is that nice, why does your paycheck feel like a total ripoff when you work overtime? 2 words, payroll withholding. Every payday, your employer's computer guesses how much tax that you owe. And honestly, the computer system is kind of dumb. When you get a big fat overtime paycheck, the system kind of goes haywire and it panics. It looks at the single check and it thinks, whoa, they're rich now. They must make a huge amount of money every single week. So it pulls out way too much of that tax for that specific paycheck. Here's the golden rule. Withholding is just a guess. Tax owed is the actual reality. If they take too much, you get that back. More income always means more take-home pay in the end. Always. Do not let anyone convince you that working more makes you poorer. It is simply not true. And speaking of getting money back, let's talk about tax refunds. People celebrate getting a $3,000 refund like they won the lottery. Free money from the government, they say. No, I hate to break it to you, but that's not a gift. That's the government handing back to you money that you overpaid all year long. So imagine handing your grocery store an extra $115 every 2 weeks, and then a year later, they mail it back to you with 0% interest. You wouldn't cheer. You'd ask why they kept your cash. If you're living paycheck to paycheck, that extra money belongs in your pocket every single month, not sitting in some government account until April of the next year. You can literally fill out a quick W-4 form at work and give yourself an instant raise on your very next paycheck. So here is your game plan. First, stop being scared of making more money. A raise will never leave you with less cash. Second, check your W-4. If your refund is huge, adjust it and keep your money now. And third, focus on effective tax rate, not the scary bracket number that we talked about a little bit earlier. And be honest, were you one of the people who thought your entire salary got taxed at one single rate? Hey, no judgment at all, but drop a comment below and let me know. This is Ike at IkeVest. I make money, makes sense. No jargon, just real numbers. Now you need to know how to save on taxes. So make sure to watch this next video. Right now, would you please click the subscribe button? And now, click here for the next video. Thanks for watching.